have to know when I have lucky, but
Hey, y'all, thanks for joining. We'll get started in just about a minute here. Hi, everyone. It's John Jay. Thanks for joining. It's January 16th, and we're going to talk about the tax issue. Some of you asked me to talk about the revenue procedure 2024-28. I'm going to cover that with the safe harbor, as they call it, the safe harbor provisions. So I normally have aceofcoins.com with my core site where you can go and schedule an appointment. You can order my LLC or consulting services. And then aceofcoins.club, we have the video subscription. So much of the content that you're hearing, especially today, you'll find lots and lots of content of that material at aceofcoins.club. I do have some promotional sites. We talk about family court and really property rights, privacy, debt collections, taxes, Financial Crimes Network. We're going to be factoring into a lot of the discussion. So this evening, I want to start out with this revenue procedure 2024-28, where it talks about safe harbor and how the cost basis is calculated. And then I want to get into the same thing I've been talking about for a long time, how and why cryptos are not taxable. They could be. Well, the disposition of them could be, right? And then also on reporting your beneficial owner information. I know I've covered this quite a bit. I've got about 19 videos on that subject, but I want to kind of summarize that here. And I have some notes on the most important points. So we'll cover all that. And certainly we can do questions and answers, okay? It would be helpful if you guys can mute out. So, because sometimes you forget and then there's background noise. So let me just start. And you guys, if you need to ask me something, you can interrupt me. It's okay. Just unmute and ask me. You can raise your hand. If I see it, I'll stop what I'm doing. It's no problem. Sometimes that actually helps the conversation. So, hey, Moko.
Hey.
Is Ray here too? I don't see him yet.
I know he's making his way in.
Okay. All right. We'll get started then. So let's just look at this. You guys can look it up. I mean, if you search on the internet for IRS Revenue Procedure 2024-28, I'm going to do a screen share and show you. If I can keep this, here you go. This is what I'm looking at right here. You can find 1,000 different versions of this over the internet. So every time I look it up to make some more notes, there's some other lawyer out there talking about it, right? So it's
Mhm.
kind of nice that, yeah, they summarize it. And so, I read this a few times. And so this really pertains to people that think that transactions from coin to coin are somehow taxable. If you've been following me, you understand that because the coins have been defined as property, then the coins are not taxable anyways, but it doesn't create a tax liability just simply because the value changes whether you did something or not. So if you're trading coins back and forth, keep in mind, let's say you're using an exchange, okay? The way the exchange works is that ownership doesn't change hands, so you're not actually purchasing anything, right? There's no change of ownership. The ownership stays the same and the beneficial ownership stays the same. The account holder is a beneficial owner on the exchange like Coinbase, for example, and the exchange itself becomes the owner in trust. That's how it works. And what do I have to verify this? I asked the IRS.
Good.
Thank you very much, IRS. Okay. The IRS has a way you can ask for a legal determination. And the way they do it is they're very lazy. They want you to make the legal determination and ask them if it's okay. So I did. And what I just told you guys in a little more technical terms, citing all their regs and stuff, the IRS comes back with a cryptic response in some cases, if they'll be willing to respond, saying, yes, take no further action, right? In their cryptic response. So that's how I know, because the IRS agrees with me. And I've never had a problem. I mean, I've been doing it this way from the beginning. In fact, the same way I look at this is the way I've been using this to solve problems for people way back in the 90s. Okay. And thankfully, the IRS defined cryptographic currency, virtual currency, as property. So nothing I was doing had to change. It just
Mm.
became one other kind of property that never existed before 2009, right? So, um, so let me just give you my commentary on this revenue procedure. Okay, number 28, as they call it. So what they're saying is the implication of the name of the procedure is safe harbor. You've been messing this up for years, so we're going to give you a break. Really? That's what they're doing. That's what the implication is on how they titled this. So they're saying, if we're going forward into 2025, we're not going to look at you. Oh my gosh. Yeah, somewhere. Okay. We're not going to let you use a single wallet. We're not going to look at all your holdings in different wallets as if it were one wallet. We're gonna want to know where the coins are being held, what address on the blockchain. Okay, that's your wallet. What address on the blockchain? Apparently, that's going to be important. I don't understand this, but I'm thinking there's no reason to do it this way other than to create a quagmire of rules that would likely result in you having to be confused and confounded and frustrated and go to a tax professional who will just participate in the whole madness. And you end up being penalized because you did something wrong because you're trying to comply. Because you're trying to comply.
Is this an IRS job fair?
Yeah, I mean, really, it's really what's happening is, they're trying to, I mean, it's being used to justify people's employment, really. I hate to,
Mm.
but, so I read this thing and you guys can read it yourself, but I'm not going to go into all the tiny details here, but
Mhm.
it's just one of those things where I've talked to really smart people over the years, okay, and like accountants, CPAs, they know way more than I do about this stuff, but I understand the basic rules, but they know them so well that they get wrapped up in all these little nuances, and they forget
Mhm.
that there's some overriding question as to whether or not there's even a tax liability. They just assume there is and they proceed forward, right? So, like I've been explaining to everyone, this kind of goes along with what I want to talk about, why cryptos are not taxable. It's property. The disposition of the property is taxable because you're going to dispose of it for dollars or something the IRS regards as dollars. They cannot regard crypto coins as dollars, just like they cannot regard gold as dollars or precious metals. However, if you dispose of them in some way for dollars, you're fair game. Okay. So this safe harbor rule would apply to those people who are, so concerned about trying to, dot their I's and cross their T's, so to speak, and they're forgetting that cryptos themselves are not taxable unless you want to tax the value change of the crypto. You can do that. You can report a value change as if you had a gain. You can certainly do that. And this is known as accrual-based accounting. Large corporations do this. I don't know why you'd want to do it. I don't know why I'd want to do it. I like the cash basis accounting. I like when I really sell something for dollars that's in my bank account or in my hand and I'm on the hook for the taxes there, right? Because otherwise I can do whatever I want to do and make my crypto holdings worth more and more. I can keep on trading them around, right? Because it's a black box. I call it, it's like a black box. So if I take dollars and I buy some cryptographic currency, some virtual currency, just to understand, this is not a purchase. If I'm using US dollars to buy virtual currency, the IRS says that's not a purchase of cryptocurrency. A purchase is when I take my crypto coins, like Bitcoin, for example, and I buy somebody else's Litecoin, where the private keys were held by somebody else with a different beneficial interest. Then that is a purchase in the eyes of the IRS. Just know that's going on. But you're not needing to claim a gain just because there's a value change. And this is what the implication here is for this whole procedure. So here's why we know, without even getting technical into the rules and so forth, here's why we know that cryptos are not taxable, because they're defined just like precious metals. So are you talking about precious metals in the same way here? Like, why aren't there safe harbor rules for where you're storing your gold coins? I mean, is the IRS saying, if you put your gold coins in your sock drawer, then it's different than if you put them in the vault in your closet? What? This is the idea. You see, it's insane. So I just think it's just creating a quagmire of people that step over themselves, and they're going to end up having all these penalties and going to audits and spending thousands of dollars to argue with the IRS over stupidness. There's my technical explanation of this rule here. If you guys are understanding what I'm talking about, that when you buy the cryptographic currency or buying property, just like you're buying now property, meaning it's not real estate. I'm not talking about real estate. I'm talking about property, something you can sell, right? The definition of property is I can sell it. I can buy it from somebody, right? I'm going to take some dollars and I'm going to buy some virtual currency. Then maybe I'm really smart and I'm going to make it worth more because I'm going to trade for Litecoin and Bitcoin and all these other coins, right? And then when it's all said and done, I'm going to dispose of all of it. Let's say I'm going to dispose of all of it. Okay, now I'm going to have some gains. If I do that in my name, as you guys know, you don't have to do it that way, but I'm just saying, as the example goes, when I dispose of the property for dollars, it's the dollars that are taxable. It's the change in the dollar value that's taxable because I got dollars, not because the coins are worth more. That's not taxable. Why? Because I cannot pay the tax in the coins. What? If I can't pay the tax in the coin, then the coin's not taxable because I'm not required to dispose of the coin. That's how we know. It makes total sense. You don't have to look up anything, okay? It's common sense. Well, maybe it's not so common, but it's logical that way. It's logical. So far the IRS agrees with me. I mean, versions of that, they agree with me. They meaning I don't no idea who did agree with me, but somebody at the IRS did. So many times. So that's the kind of how this all works together once you understand cryptos are not taxable for these reasons. And if you guys want to ask me specifically, I can go into it, but let me just do the stop share here. So you can just stop now and ask me something, but I want to get into this. I can answer that question too about cryptos to precious metals. Again, you have precious metal. It's a type of property, right? What about intellectual property rights? Like the rights to music. I'll throw that in the mix. We got precious metals, intellectual property rights, and virtual currency. If I'm going from one to the other, what's being done here? I'm going from one property to another. Did the ownership or the beneficial interest change? Nope. So
That's
where's the
my
tax
thought.
liability? I didn't dispose of some property for dollars yet, right? That's the key thing.
Mhm.
All right. Yeah. So you could make it's a great example. What about, what about precious metals and coins back and forth? Same, that's the idea. Property tax. Let's not talk about property tax. That's a bit different. That's a little bit different. I'm talking about income tax, not even sales tax.
Can
All
you
right.
say a little bit more about when you don't want to take it out of your name, in your name?
Okay, so if you want to just keep the property rights out of your estate is how I explain it. That is another way to avoid certain types of liability. So if I dispose of property in my name, I'm going to have a certain tax treatment if I'm filing a 1040 every year. Let's say I get a 1099, right? Well, then I'm going to have to report that. Otherwise, the IRS is going to say underreported. That's what's going to happen. If I do the transaction in a limited liability company, the limited liability company is going to have a different tax treatment. It's my choice. I can file a tax return for it. I can also claim the LLC's money as my own and put it on my 1040. No problem. I can do that too. So there's different ways of doing it. I can also not report on the LLC. No problem. The IRS does not care about that. Just keep in mind that if I'm going to use that money, the dollars that got paid into the LLC from disposing of some property, if I use it for my personal expense, like for example, paying off my credit card bill or something like that, then even if the IRS can't see it, I still should report it. And the way I report it is other income, not on Schedule C. So that's a quick rundown of how you would use a tax deferred structure is what I call it, an LLC. You could do that. And you could do that with a single member. You don't need two members. It's better with two members, but you can do it just fine with a single member.
And isn't there some way that you can use a PMA with this structure as well?
Well, it doesn't matter. The ownership of the LLC doesn't matter. What you're getting with the LLC is the retitling of the property rights. So as long as the titling allows whoever's going to report to the IRS to report it in the name of the company, you win. That's it. That's all you care about. If someone wants to investigate the ownership for a certain reason, like attach a liability, okay, that takes a long time and it's probably unlikely that will ever happen to you. But yeah, I mean, like for example, if I want to use an LLC to just avoid taxes on something, I could just be the single member. If I want to use an LLC to defeat a debt collection in a court where the rules of civil procedure are going to be used to investigate my interest in the company, and if I maintain my 100% interest in the company, then whatever the company owns is fair game for the creditor to take. So to defeat that, I could add my brother, for example, to the articles. Right? So that's when I would want to have more than one member. So you can use a PMA as an innocent party. You could do that too. You just won't have charging order protection, but you will have an innocent party. So that's not even necessary. All we're talking about is retitling the money, retitling the property. And so there might be a time where if you're gonna, let's say it's a small amount of money. I mean, let's say it's $30,000, okay? All right, fine. And maybe it's easier just to clear the funds in your name. And then you want to figure out your cost basis. If you're doing something like that, okay, maybe that's a good idea then, right? I don't know how the IRS would know about wallets anyways, because is there a space on the 1040 to fill that out? I mean, how do you put a wallet address on something? I don't know. How do you report that? I mean, I guess that only comes up at an audit, I think maybe that's why they want to know if you're involved with cryptos, right? I don't know. Yeah. Request you select one of the options. I don't know. Well, what if you have crypto holdings on something like an exchange that automatically requests you select one of the options? I don't know what that means. I don't know. If multiple states start accepting Bitcoin for taxes. Yeah, so the states themselves would not declare cryptos as legal tender. I don't believe the states are permitted to do that, but the United States would, or the Federal Reserve Bank could do that. Your federal government could accept or declare that Bitcoin, for example, is legal tender. In fact, I wouldn't put it past them. They actually should probably do that. I mean, we have options. We don't have to use Bitcoin, so, I mean, if they wanted to defeat our use of taking profits with a stable coin, then if the stable coin was defined as legal tender, then we'd have to run to a new stable coin, right? If you're dealing with, you'd actually have a gain, right? Yeah, so I'm recording this and we'll talk about it. So let's get into, and I'm sorry if I missed some of these, but you guys can help me put the safe harbor tax code in chat. Okay, the safe harbor tax code There isn't one. I just let me just tell you how to find it. So if I just type in on the I just search on the internet for I just put the word IRS, right? And then I call it Revenue Procedure 2024 because it was published last year and it's number 28. They do it in sequence, right? So if you look in chat, you'll see that's what I would do. I don't mean to send that to only one person here. Let's see if I can do. Oh, I said, is that everyone? Okay, yeah, there you
I
go.
accept everyone.
No, you beat me to it. So okay, yeah. So you got it. All right. Let's see here. You got the idea. Yeah. Okay. So yeah, you can search for that. And so as we understand the FinCEN reporting, oh my gosh, I've been watching these lawyers talk about how the courts are, it's so dramatic, right? How the courts are saying it's constitutional and then not constitutional and all this drama. And none of that matters. I told you guys like 2 years ago, let's assume that it's all constitutional. We know it's not. We know it violates the Fourth Amendment. The judges said so. I mean, they know this. I mean, how do you implement these regulations and survive public debate? Is everybody an idiot? Is everybody incompetent? Meaning all the lawyers that are commenting. I read some of their comments. They're completely off point. Like, who cares? That's just stupid stuff. So yeah, that's how they survive public debate. No intelligent questions. Like, why would we need to like have a thought crimes feature is what they're doing. But anyways, I assume that the regulations, now remember, this is under the Currency or the Corporation Transparency Act, I think it was. Corporations Transparency Act, CTA, right? Okay, let me just mention on the mining coins, okay? If you're mining coins, right? You're getting value out of it. You're spending money and you're getting value out of it. I'd have to see the contract and see what you're doing, but really, if you're mining coins or if you're getting paid in coins, you're like, for example, if it's called interest and you're getting interest in coins because you're staking, for example, that's not going to be taxable. Okay, again, it depends on you're getting into dollars. Okay, yeah, I don't know about how I'm getting the wallet address, but anyways, as far as FinCEN goes, I made a bullet point here, but basically what I was explaining in the last year and a half at least is that we can never, no one ever would know who the reporting company is. Okay, the reporting company is the one who's responsible under the regulations, Title 31 CFR, I think it was Part 1010.380. Okay, who's a reporting company? It's their company that reports. So who's going to do that? Well, is it your LLC? It could be, but it could also be someone else, right? It could be someone who's claiming to be the reporting company for your company. It's someone who says is the reporting company and does so by filing the report and doing so with like under penalties of perjury or whatever you have to do, okay? I don't even know what that is. So there's no way to pin the liability, or at least it's ambiguous, to pin the liability on somebody for not being the reporting company when you have an option, right? So I ask people, we have this conversation so many times, and I ask, let's imagine that you think there's a legal duty. Let's say there's a legal duty to actually do this reporting. Let's say I'm wrong. So how would the FinCEN creatures know? Because the FinCEN creatures would know by a mechanism that could be used in lieu of what they're saying you have to do. So if the FinCEN creatures are telling you to do a thing a certain way, then they're not going to check to see every filing of an LLC. They're not going to know. I don't see an incident where the FinCEN would know at any moment that there's an LLC out there that didn't report because there's another exemption. Out of the 23 exemptions that came out in the regulations, one of the exemptions is that the company has a net worth exceeding $5 million. How would it know that? It's not disclosed in the articles. And moreover, what if upon formation of the company, it adopted a form of balance sheet with a promissory note to Uncle Bob for $5 million? It's ridiculous. You know, I mean, how is FinCEN going to know, or how are you going to claim your exemption without waiving your exemption? You have to file a report, right, to qualify for the exemption or whatever they have to do. I don't know. But I'm just saying, then we get into the beneficial owner information is identical to taxpayer return information or taxpayer information, okay? Which is described in 26 USC 6103. Now, I did explain that the CTA regulations are just that. They're implementing regulations. Remember, the statute controls. The regulations give you more specific detail as to how to comply with the statute, but the statute controls. So if you have a statute that says your beneficial owner information using the language taxpayer return information is private and can only be obtained through the Secretary of the Treasury upon request when an agency of the government is administering a tax code or investigating a crime that's probably related to taxes, okay? Those are the criteria where anyone could ask. I don't even know if it's anyone. I think it has to be a police function, okay, to ask for the information. So why would I waive that protection with a new regulation when the regulation is not controlling when it is compared with the statute? The statute protects my right to privacy in disclosing this information. I'm not required to. And if I could use the analogy, maybe this helps explain it. Maybe Moko can jump in here for a second, but back in the days when we were fighting the phony pandemic, we had employers asking for disclosure of your medical records. And so we would send a letter back to the employer saying, yeah, sure, we'll give it to you. Just here's my doctor's name and address. Just ask him and he'll give you everything that you asked for, which we know is not true because the doctor is going to say, you know, patient doctor privacy, right?
Mhm.
And so the employer says, well, we can't get it from your doctor because of patient privacy. Well, then what makes you think I'm going to give it to you? If you can't get it from my doctor you think is going to be an advocate of my privacy rights, but somehow I'm gonna waive my privacy rights with you.
Mhm.
You see? So it's the same thing with this. The IRS itself is saying it's got a statute from Congress that says that information that's being sought by the FinCEN creatures is protected under 6103. They can only be accessed with certain qualifying criteria, okay? And ironically, FinCEN is under the Secretary of the Treasury. What?
So do you
So,
think
yeah.
that they're doing this because like the whole way that they get taxes in the first place is third-party reporting with no underlying liability being claimed? So do
I
you
think
think this
there's
is their,
something else
this is
going
their
on.
thing?
I think they're getting people to comply by coercing them and tricking them for some other purpose, and I'm not sure what that is yet.
Mhm. Well, I was
Yeah, I
just
don't
wondering
know.
if it was making people like turn into their own third-party reporters kind of thing, sort of.
But there's something more to it than that because you're
Yeah.
gonna have to report. I mean, I'm thinking down the road quite soon that you're not gonna be able to form a company unless you give up your biometric data. I think they're gonna try to make it where you have to use a driver's license to get on the internet. It's gonna be something like that. I hate to say.
Mhm.
Yeah, as far as telling your CPA that you own crypto and he wants to talk about it, just tell him, I don't want to talk about it. I mean, really, you're the boss. Your CPA is providing a service to you. If he doesn't like that, you know, you can, if you can't train him, you can fire him. I hate to say, I mean, sometimes you have to do that. Some people are happy to do that. I mean, what I do for accounting, if I need accounting for something, I'll just go to a bookkeeper. I don't even give the bookkeeper my real information. I give him enough he can look at my bank statement, but I redact all my identifying information. He doesn't even know my name, you know, so. I don't know if the IRS knows that you own cryptographic currency. I mean, there can always be that assumption. But then how does the ownership established? And a third party would tell on you, right? Like Coinbase, you can get that, they can get that through the subpoena or summons, an audit summons, right? I don't know. But then so what? You know, I mean, if I own gold and I tell the IRS that I own gold, what does that do? But if I told them I sold the gold, okay, that's different. All right, that's a different conversation. It doesn't matter if you own crypto. Right? Because you understand it's the transactions between the different types of coins, if you're doing that, is again still not relevant for many reasons. Okay. But yeah, the FinCEN, I can go into more detail if you want. I mean, there's the aspect of when you're going to report the beneficial owner information, let's say I'm wrong and everything. What about the liability for transmitting this sensitive data over the internet? Does Financial Crimes Network and its website interface have a way to protect that or guarantee the data security or indemnify you against, let's say, identity theft?
You don't wanna start?
I mean, these are questions that,
File.
should be important, so,
You not wanna start?
Can we do it tonight?
okay.
Why?
There goes, okay. Anyways, you have to unmute Moko and Ray if you need to. So, are there any questions about that? Did, I know you guys have some pretty good questions here. Sometimes I can't quickly read through. Yeah. What about the CPA and the cryptos? Does that answer? I've had that come up a lot. Look, if an accountant is talking about he's a crypto accountant or something, he doesn't even understand. I mean, I'm not trying to be rude, but that person is just incompetent to talk about that.
You know,
And-
the crypto is just like the income tax itself, voluntary
Well,
assessment.
yeah, I
You have to
mean,
make the return.
you're talking about capital gains is what it comes down to for the disposition of property. So capital gains, you know. Yeah, I don't know. I mean, look, if the government, if the FinCEN creatures want to really track you, it's actually quite easy. I mean, Financial Crimes Network could easily have a subscription with Intellius. Intellius is great for collecting everybody's data from, you'd be shocked. Go to Intellius.com and search on your name. For like $1.28, you'd be shocked about what kind of data you can get on yourself.
Hmm.
You should be angry. Yeah, I mean, why don't they just do that? That's what I'm saying. I think there's something else going on. I don't
Right,
understand.
right.
Yeah.
I know.
I mean, it's the United States. Shit, you know? I mean, maybe they want to get information they couldn't normally get without a criminal investigation, right? They want to scare you or coerce you into giving it up.
Mhm.
Or maybe they're just not that smart. Maybe
All
they
we have
don't
to
know.
do is go to Facebook. Everybody's telling everything.
Go to Facebook, exactly. Yeah, you could probably have the AI just scour Facebook and get all kinds of data on people. Oh my gosh. Yeah, there's all kinds of things like that. So, but I want to cover that. The revenue procedure, again, that's just for people that think that different trading between coins, that these are people that don't even understand what a purchase is. They think that buying coins with dollars is a purchase of coins, right? So buying coins is buying property, it's buying precious metals. Trading between crypto coins and gold is nothing new. It's nothing that doesn't create a tax liability. It can, if you report it that way. If you report, again, buying something doesn't create a tax liability, but buying something and then disposing of it for dollars, yeah. If you do that in your name, yes, you will create a tax liability, yes. So you guys know the rules on that. Well, did I say anything new? I don't think so, but nothing
No,
shocking.
but drumming it in is good.
Okay, well, it's kind of why I want to do this, because still there's some people asking me, can you make some comments on Rule 28? Okay. I think you guys already, a lot of times I find that if I give you my opinion, you already kind of thought the same thing. You just wanted someone else to agree with you, So,
Well, if they ask anybody anything, just tell them to refer back to your last week's video on subrogation.
oh, the termination of perjury. Yeah.
That's a badass video.
Yeah, I
Mhm.
hope it does answer, on the safe harbor thing. It's a marketing job, okay? It's gonna make a lot of people frustrated and flustered and spend more money than they need to, but hey, ignorance is costly. And somebody's asking here about the oh, okay, so I have a video, and look, I put a lot of work into getting the IRS to, make a legal conclusion or agree with me. So this is known as a request for determination letter. You can see how to ask the IRS for something like this. The IRS will tell you. It has actually a booklet. In fact, it's on the internet now. It's a revenue procedure, and it tells you how to write a request for determination letter. It turns into a 6-page letter, but the letter itself, the meat of it is only like a half a page. All right, they make you fill out all this other stuff. So I fill this all out, and I make a legal conclusion, which is like half a page, and they always, if they're going to answer me, they come back and say yeah, or if they don't answer, they don't do anything, and I tell my client to exclude the erroneous 1099. And so I prefer not to just distribute this to people. I trust you guys, and I know that you're going to use it to learn, but I have a video series that explains every aspect of that letter because it's so important that you understand what I'm doing. I remember I've been doing this work since the 90s, the early 90s, and I remember I would put a lot of work, my partner and I would put a lot of work into writing something. And I'm not saying you guys are going to do this, but we would prepare something that is our own work. And then 3 months later, we would have clients come back in our office having all kinds of problems, or maybe a year later, having a problem with something. And we get their file and we find out that someone got our work and then sold it for lots of money to other people and perverted it into some lame, stupid argument, which of course doesn't work. And then that person has all these problems, and then they're coming back to us and we saying, this is kind of a version of my letter that we did, or legal argument. So I just want to avoid that situation. So I really want you to learn and understand. And so I have a video, I think it's like maybe even 2 parts, maybe it's 3 parts. And I actually have the actual request for determination letter in the video.
Mm.
And if it's not there, if you subscribed and it's not there, let me know, I'll send it to you. But I just don't want to, I know you asked me here to send it, but I just told you what the core of the letter is. I made the legal conclusion that the ownership didn't change when the property is held at the exchange. The exchange is the one that issued the 1099 based upon valuation changes where the ownership remained the same and the beneficial ownership remained the same. And the IRS agreed every single time, which is about maybe 22 times, something like that, a couple of dozen times, okay? So you don't need it. Lately I just stopped doing it and I just tell my client, exclude the 1099. If you have, an examination changes notice, let me know. And so far haven't had it. And this kind of comes out from way back in the early 2000s, late 90s, where I handled like tens of thousands of debt collection cases, and many, many thousands of 1099s came from the debt collector and the creditor, because that's how the scheme works, right? They get write-offs. And so there's a couple of rules that we were able to use to rely upon to exclude the 1099 from the 1040s. So with the bank, if you didn't pay the bank, let's say the $10,000 credit card bill, the bank would send you a 1099 for $10,000 for what's known as imputed income, right? Which is technically correct. Sometimes it's not because it's a debt collector, but because of these couple of letter rulings that someone else got a long time ago, back in the 90s, we're able to exclude that 1099, and the IRS did not need an explanation. They just accepted at face value. They understood. So there was no computer generated inquiry when we did this. So
Could you explain that again, John? I didn't quite understand what you were saying, that you get, if you pay off your credit card for whatever amount of money, the credit card company has to give you some kind of a 1099?
No, if you don't pay it. So if you borrow money, okay, credit card is borrow money, right? And you don't pay it back, the IRS is going to conclude that that's money that you received, income, because you didn't pay the loan back. It was a loan, but you didn't pay it back. So they're actually correct in doing that, and they call it imputed income. It's
Crazy.
taxable. But many times the debt collector would do it. Sometimes the debt collector would do it and the creditor for the same account would do it. It's total fraud. But we ignore all that stuff. For tax purposes, we could exclude it. And there's a couple letter rulings. One is if there was no, what do you call it? Novation. If you didn't have a settlement agreement, right? A new contract to pay the debt and then default on that, then there would be no grounds for the imputed income tax liability. The other one was that a letter ruling concluded that the IRS said, well, if you're insolvent, well, I could almost show all my clients as being insolvent because they had a mortgage or something, right? I can always show they were insolvent. So we always excluded the 1099 because the IRS never questioned it. And this is where we're getting to now with this. They understand, I guess, someone somewhere, maybe you understand. So far, I haven't had a problem with it. Right? If we do, I can make the legal argument, okay? If we have to go to tax court or something, which I don't do, but if that's even necessary, okay? Or we can talk to the examinations officer. They understand. Not at first, but they will, okay? So far, we haven't had that situation. Does that help?
Yeah.
Yeah, you could do a 1040X too. You could amend your return. Yeah, sometimes I don't recommend that. I mean, most of the time I don't recommend that, but yeah, you certainly could do it. You're technically correct. You could amend your tax return. Yeah. Yeah, so anyways, am I missing something important? I'm sorry, I'm trying to.
No, I think
don't
you're
wanna
getting
miss
everything.
there at the. Yeah, so. But yeah, just understand also the nature of cryptos is that it's not really an investment. It's more of a speculation. It's always going to be that way unless you're using it for staking or something, right? Or unless you're using your crypto holdings as collateral for a loan, which is highly recommended. I highly recommend if you can do that, never sell your crypto. I mean, if you understand how it works, use it as collateral to borrow dollars, and that's not taxable, right? And you can go buy some assets, right? And really, you can do it in a debt-free way. Kind of, the asset itself is not encumbered, right? You have another form of collateral. It's kind of cool. So, but it's interesting. You had this court in Georgia in March, so that must have started first day of the year. Okay, that was fast. Court in Georgia said that the new CTA regulations were unconstitutional. I don't know if that was appealed, but then you had the case in Texas that had this weird iteration with, the appeals court and the emergency appeals court and all this nonsense. But again, none of that stuff matters, but it's interesting how these district court judges and the appeals court even is agreeing that it's unconstitutional, that it violates the Fourth Amendment, from what I understand. I didn't read all the cases. And I think the funniest one that I mentioned before is, think about it like this. What is the stated purpose for the disclosure, FinCEN disclosure? It's a national security interest, right? Well, has the United States ever been able to really guarantee national security? No, it's an ongoing battle, right? It always will be. So why would you put it on the small business owner, the guy that sets up an LLC for, just moving money around that's not even a millionaire? Why would you put that on him? And as if discovering that information is somehow going to be in the national security interest. It's a joke. So there are no legitimate national security interests in these regulations the way they're being applied. It's not going to solve the problem. You guys are already demonstrating your incompetence. Doing this to the little guy ain't going to help you. That's the funny one. Yeah, we'll be there for the call, Todd. Appreciate that. I'm ready for that one. All right. Anything else, guys? You want to add anything? All right.
Thank
Well,
you.
thanks so much. I'll put this up on YouTube. A
Thank
loan platform. I don't know. If you find some good loan platforms for the cryptos, let me know. I haven't taken the time to look into it, but I'm sure some of you out there are already doing that. So, all right. Well, have a good night and enjoy your weekend.
Thank
See you
you.
next
You
week.
Thank
All
too.
right.
you. Thank you so
Alrighty.
much.
Enjoyed it.
Thank